about your risk tolerance. Do your due diligence, read filings, understand their revenue streams, and look for real-world demand. Don't just rely on hype or social media buzz. Don't get swept up in buzzwords. Focus on substance. Look for evidence of real traction, not just flashy marketing. Treat this as a moonshot, not a core holding. It's a high-risk, high-reward play that should only be a small part of your portfolio. Only invest what you're willing to lose. Protect your capital, and don't let FOMO drive your decisions. Let's shift gears to something more established: Wolfspeed. Wolfspeed, ticker Wolf, is a global leader in silicon carbide and gallium nitride semiconductors, two materials that are absolutely essential for the next generation of electric vehicles and 5G wireless networks. These advanced chips are at the heart of the technology powering the EV revolution. Wolfspeed's technology makes electric vehicles more efficient, extends their driving range, and helps reduce charging times. At the same time, their chips are critical for powering next-gen telecom infrastructure, enabling faster, more reliable 5G connections. As EV adoption and 5G rollout accelerate worldwide, Wolfspeed's addressable market is set to explode, with demand for their chips expected to surge over the coming years. But the stock's been volatile, hit by industry cycles, supply chain issues, and heavy spending on new manufacturing plants. The company is navigating a challenging environment as it ramps up production capacity. Wolfspeed is burning cash to scale up, betting big on future demand. It's a classic case of short-term pain for the promise of long-term potential, as they invest heavily to secure their place in the market. The thesis is simple: if Wolfspeed's massive investments pay off, they'll dominate a critical tech niche for years to come, shaping the future of both transportation and communications. But competition is rising. Other chip makers are racing to get in on the action, and the battle for market share is heating up. Wolfspeed must keep innovating to stay ahead, pushing the boundaries of what these materials can do. If you're a long-term investor who believes in the future of EVs and 5G, Wolf's recent pullback could be a compelling buying opportunity. Expect volatility and be patient. This is a multi-year story, not a quick trade. The road ahead will have ups and downs. Before buying, listen to their earnings calls and check their supply deals with automakers. These partnerships are crucial for long-term growth. The story matters more than the current numbers, but make sure the story is still on track and management is delivering on promises. This is a strategic bet on the future of technology, with the potential to reshape entire industries. Don't expect overnight gains, think 5 years out, and be prepared for a bumpy ride along the way. If you want exposure to the EV and 5G boom, Wolfspeed is a strong candidate to consider for your portfolio, but always watch the competitive landscape as the semiconductor industry can shift quickly. Let's move to our next pick: Elong Power, another